All right, let's take a deep dive into Power Finance Corporation Ltd.
PFC.
PFC, right.
Yeah.
You send us a whole bunch of documents, their Q2 FY25 report, press release, investor presentation.
Mm-hmm.
Seems like you want to get a handle on how this major player in India's power sector is actually doing.
Yeah.
So we've got the raw numbers, we've got how PFC wants to spin those numbers.
Yeah.
Always interesting.
Definitely.
So our mission today, cut through all the jargon and figure out what's really going on with PFC.
Absolutely.
And maybe even what it means for the Indian power sector in general.
Sounds like a plan.
Okay. So first things first. PFC is celebrating, right? Big profit jump. 18% year over year for the first half of the fiscal year. Stock price has soared, over 90% in the last year. So is this all as rosy as it seems?
Well, the profit jump is impressive.
Yeah.
But like anything, I think we have to look deeper.
Okay.
So a big driver is their interest income. That's up.
Which means?
Which means they're lending more, which is good for growth, but also, inherently riskier. It's a bit of a high wire act.
Okay.
Exciting to watch, but, one wrong step.
Yeah.
Things could go south.
So that brings us to, I guess, maybe the Achilles heel of any lender is asset quality. And their report boasts about a low and decreasing gross NPA ratio.
Yeah.
Under 3%.
Yeah.
And their net NPA ratio is even better, under 1%. They're practically doing a victory dance about this.
Right.
So for those of us who don't live and breathe finance, break down what these NPAs mean.
Okay.
And why we should care.
So think of NPAs as bad loans.
Okay.
The lower the ratio, the fewer loans are going bad, which means on the surface, PFC is managing risk pretty well.
Okay.
But there's another side to this.
Right.
They're also really proud of their high provisioning rate,
Okay.
a whopping 74%. And provisioning, think of that as a rainy day fund.
Right.
In case some of those loans do go bad. So it's responsible, but it could affect future profits.
Okay, so low NPAs, good.
Yes.
High provisioning, good, but maybe a bit of a yellow flag.
Maybe.
One other thing really jumped out at me. They're saying they've added 0 new NPAs
Right.
in over a year.
Yeah.
That seems statistically improbable.
It is unusual.
What's the story there?
Well, there are a few possible explanations.
Okay.
Maybe they've gotten incredibly selective with their lending,
Right.
only approving projects with, rock-solid financials. Or maybe they're masters at damage control,
Okay.
resolving potential NPAs before they officially hit the books.
Okay.
So, they're talking about their success with the Lanco Amarkantak project.
Right.
They actually turned a potential loss into a win.
Yeah.
So it makes you wonder, are they financial wizards or are they hiding something?
Intriguing.
Yeah.
So they're either playing chess while everyone else is playing checkers, or they're really good at sweeping things under the rug. But, enough about the potential problems. Let's shift gears and look at what PFC is actually doing.
Sure.
And their loan portfolio is kind of a roadmap, right?
Yeah.
It shows us where they're placing their bets.
Exactly. And one thing that really jumps out is their growing focus on renewable energy projects.
Yeah, this caught my eye too. Their renewable energy loan book has grown quite a bit. They're really touting supporting over 50 gigawatts of renewable energy capacity. That's a quarter of India's total. So is this as big of a deal as they're making it out to be?
I think it's definitely significant. This aligns with India's push for clean energy. The government has set some, pretty ambitious targets for renewable energy, and PFC is positioning itself as a key player in this transition. So if they play their cards right, this could be a very lucrative bet on the future.
Speaking of bets, I noticed they've also started financing infrastructure and logistics projects.
Yes.
That's new territory for them, right?
It is. It's a sign they're looking beyond traditional power sector financing. Okay.
Aiming to diversify, which makes sense, right?
Yeah.
Considering India's massive infrastructure development plans, roads, ports, railways, it's a booming sector, and PFC wants a piece of the action.
So they're not just powering India's lights, they're powering its growth.
Exactly.
Before we move on, I have to mention this one last detail.
Right.
From their ESG report.
Okay.
Their employee attrition rate is minuscule,
Wow.
0.7%. So they're basically the Hotel California of Indian PSUs.
Right.
And they boast the highest profit per employee among Maharatna PSUs. Now, for those who don't speak corporate jargon, a Maharatna PSU is
A prestigious designation for top-performing public sector companies in India. basically the cream of the crop.
Exactly. So what do these impressive stats tell us about PFC as an organization? I mean, are they just a great place to work, or is there something more to it?
It definitely suggests a stable and productive workforce, which is, essential for long-term success.
Yeah. That high profit per employee also points to operational efficiency. They're getting a lot of bang for their buck, which investors love to see.
So they're keeping their employees happy and their investors happy. Sounds like a winning formula. But is it sustainable? That's what we'll be exploring as we continue our deep dive. Welcome back to our deep dive into Power Finance Corporation Ltd, PFC. We've uncovered some pretty fascinating details about their financials, their strategic moves, but, there's still a lot to explore.
Right. We can't just skim the surface. Got to dig deeper.
Yeah, exactly.
Yeah.
Speaking of digging deeper, let's go back to that curious case of 0 new NPAs.
Okay.
It's like they've discovered the fountain of financial youth,
Right.
defying the natural aging process of loans.
Yeah.
Is this sustainable, or is it just a matter of time before, those NPAs start creeping up?
That's the million-dollar question. Maybe their stringent selection process is weeding out risky projects.
Yeah.
But, that also limits their growth potential.
So they're choosing quality over quantity.
Perhaps. But remember, we're only looking at a snapshot in time.
Right.
The real test is if they can keep this up over the long haul.
Okay.
Only time will tell if their strategy is truly sustainable.
All right, let's shift gears again and get down to, the nuts and bolts of PFC's operations.
Here.
Their loan portfolio is kind of like a roadmap, right?
Mm-hmm.
Shows us where they're directing their financial firepower. What can we glean from this roadmap?
Well, like we touched on earlier, there's a definite push towards renewable energy.
Right.
Which is encouraging. But, conventional power generation still makes up a pretty big chunk of their lending.
Right. It's not all solar panels and wind turbines yet.
Yeah.
I mean, coal-fired power plants are still a major part of India's energy mix.
Yes.
And PFC's financing those projects, too.
They are.
Yeah.
And this is where things get interesting. On one hand, India needs reliable, affordable power.
Right.
And coal plays a big role in that. On the other hand, there's, increasing pressure to reduce carbon emissions.
Right.
Transition to cleaner sources.
So they're caught in the middle of a tug of war.
Exactly. Between the present and the future. And this is where their diversification strategy comes into play, right?
Okay.
By branching out into infrastructure and logistics, they're not just reliant on the power sector alone.
Right. So it's like they're building a more balanced portfolio.
Exactly.
Spreading their risk across different sectors. Now, is this a wise move, or are they spreading themselves too thin?
Well, diversification can be a double-edged sword.
Okay.
Done right, it mitigates risk, opens up new avenues for growth, but it also requires careful planning, careful execution.
Okay.
We need to see how effectively they manage these diverse investments.
All right. So they're playing a high-stakes game, right? Balancing the demands of the present with the uncertainties of the future.
Absolutely.
But let's not forget about the human element. We talked about their stellar ESG performance.
Yes.
Particularly their low employee attrition rate, high profit per employee. But what about the G in ESG governance?
Right.
How well is PFC managing itself, ethically, transparently?
That's a crucial question, and one that investors are increasingly focused on.
Yeah.
Good governance is the foundation of any sustainable, successful organization.
So what's the verdict on PFC's governance? Are they walking the talk?
Well, based on what we've seen, they seem to be doing well.
Okay.
They have a diverse board of directors, including 2 women, which, suggests a commitment to inclusivity. They've implemented some pretty robust risk management procedures, which is essential for any financial institution.
Right.
And their financial reporting is transparent, detailed, which builds trust with investors.
So no red flags on the governance front.
Not that we can see.
Yeah.
But of course, a truly thorough assessment, would require digging deeper into their internal policies and practices.
Right. We're just scratching the surface here. But so far, it seems like they're ticking all the right boxes. Now let's zoom out a little bit and consider the bigger picture.
Okay.
What does PFC's performance tell us about the state of India's power sector as a whole?
Well, on the positive side, PFC's strong financials, suggest that the power sector is in relatively good health.
Okay.
Demand for electricity is growing. There's plenty of financing available for new projects, both conventional and renewable.
So the lights are staying on in India, and the future's looking bright, at least from a power generation perspective. But are there any shadows lurking beneath this bright facade?
Well, there are definitely some challenges. India's power distribution system, it's notoriously inefficient,
Okay.
high transmission and distribution losses.
Right.
This cuts into profitability,
Yeah.
hinders the sector's overall performance.
So it's not just about generating enough power, it's about getting that power to consumers.
Exactly.
That-
Efficiently,
Yeah.
reliably. And then there's the affordability issue, right?
Right.
Electricity prices in India are relatively low.
Which is good for consumers, but it puts pressure on the power generators and distributors
Yeah.
to manage their costs really effectively.
It's a complex equation with a lot of moving parts. But overall, it seems like PFC's performance kind of reflects a power sector that's moving in the right direction,
Yeah.
albeit with some bumps along the way.
I'd agree. It's definitely a sector in transition, grappling with, sustainability, affordability, and efficiency. And PFC's right in the middle of all of this,
Yeah.
playing a crucial role.
Speaking of shaping trajectories, we can't ignore the geopolitical forces at play here, right?
Right.
India is a rising power, ambitious economic goals, and energy security is vital.
Absolutely. India's reliance on imported fossil fuels,
Right.
oil and gas,
Yeah.
it makes them vulnerable to global price swings, supply disruptions.
And this is where PFC's role becomes even more important.
Yes.
They're not just financing power projects, they're financing India's energy independence. Exactly. By supporting the development of domestic energy sources, both conventional and renewable, PFC is helping to reduce that dependence on those foreign imports.
So they're not just a financial institution, they're a strategic asset, safeguarding India's energy future.
Right. And that strategic importance is something that investors are very aware of.
Yeah.
It's a major factor in their stock price performance.
Okay, so we've got impressive financials, a strategic focus on renewables, infrastructure, strong ESG credentials, and this pivotal role in India's energy security. Seems like PFC has it all. But as we know, no story is without its plot twists. What about the competitive landscape? Are they facing any serious challengers?
Ah, yes. The competition. While PFC is the dominant player in India's power finance market, they're not alone.
Right.
There are other major players out there, both public and private, all vying for a slice of the pie.
So the arena's getting crowded. How's PFC responding to all this pressure?
Well, from what we can gather, they're taking a multi-pronged approach. Firstly, they're leveraging their size and scale to offer competitive financing terms.
Okay.
They've got access to a lot of capital, allows them to offer lower interest rates, longer loan tenures.
So they're flexing their financial muscle, using their size to outmaneuver the competition.
To some extent, yes. But they're also really focused on building strong relationships with their clients,
Okay.
providing, value-added services beyond just financing. They're not just throwing money at projects.
Right.
They're trying to be trusted partners, understanding their clients' needs,
Right.
offering customized solutions.
So it's not just about the money. It's about the relationship,
The expertise.
the expertise, the personal touch.
Yeah.
Are they succeeding in this effort to differentiate themselves?
It seems like they are. Their deep understanding of the power sector gives them an edge, right? They have a team of seasoned professionals who understand the nuances of the industry, can provide valuable insights, guidance.
So they're positioning themselves as the go-to experts,
Yeah.
the ones who can not only finance projects, but also help their clients navigate, all the complexities of the power sector.
Exactly. And that expertise is a key differentiator,
Yeah.
especially in a market that's getting more competitive.
But what about the rise of non-bank financial companies?
NBFC.
NBFCs, right. These newcomers, they're shaking things up.
Yeah.
Often more agile, innovative than the traditional banks.
Yeah.
Are they a threat to PSC's dominance?
That's a great question. NBFCs are definitely a force to be reckoned with.
Okay.
They're often more willing to take risks, can adapt faster to changing market conditions.
So they're the disruptors,
Yeah.
the nimble players.
Exactly. And PFC's aware of this challenge. They're trying to streamline their processes, embracing digital technologies, trying to become more agile themselves.
So they're not resting on their laurels. They're adapting, evolving, trying to stay ahead of the curve.
Yeah.
But is it enough?
Well, that remains to be seen. The competitive landscape is always shifting, and PFC needs to stay vigilant, proactive to keep their leadership position.
Okay, we've covered a lot of ground here.
We have.
We've analyzed their financials, delved into their strategy, explored their ESG credentials, and even assessed the competitive landscape.
Mm-hmm.
So what's the bottom line? What should our listener take away from all of this?
Well, I think the key takeaway is that PFC is a company at a crossroads.
Okay.
They're facing both challenges and opportunities.
Right.
And their future success really depends on how well they navigate this complex landscape.
So it's a story of transformation, a company evolving to meet the demands of a changing world.
Exactly. And it's a story that's still being written. The next chapter is yet to unfold.
What a cliffhanger. But before we dive into that next chapter, we need to take a break. Stay tuned, and we'll be back with more insights and analysis in Part 3 of our deep dive into Power Finance Corporation Ltd. Welcome back to our deep dive into Power Finance Corporation Ltd. We've really dug into their financials, their strategic moves, even got a glimpse of their corporate culture. But, before we wrap things up, I think we got to address the elephant in the room, the one with the solar panel hat and waving a wind turbine flag.
Right. The global energy transition, we can't talk about the future of power without considering this.
Exactly. And especially in a rapidly developing nation like India. So, we've touched on PFC's growing focus on renewable energy. But the question is, are they moving fast enough? I mean, the world is racing toward a cleaner energy future. Are they keeping pace? Or are they going to be left behind?
Well, that's the multi-billion-dollar question, and there's no simple answer. On the one hand, they are putting their money where their mouth is. They're investing heavily in solar, wind projects. They've even set some pretty ambitious targets for green lending.
So they're not just dipping their toes in, they're really diving in.
Yeah.
But, they're still heavily invested in conventional power generation, particularly coal. So how do you reconcile those seemingly conflicting strategies?
It's a balancing act, isn't it? They're trying to meet India's current energy needs, which still depend heavily on coal, but they're also, trying to prepare for that future powered by renewables. It's a tightrope walk between the present and the future.
And that tightrope is only getting thinner, I think, as the energy transition really picks up speed. So what are the biggest challenges PFC faces in trying to navigate this whole transition?
Well, the transition to clean energy isn't just about building more solar farms and wind turbines.
Right.
It requires a complete overhaul of the entire energy ecosystem.
Okay.
You're talking about transforming how power is generated, transmitted, distributed, and that is a massive undertaking. It requires not just the money, but also tech innovation and policy support.
So it's not just about writing checks. It's about being a catalyst for change.
Exactly.
Fostering innovation, working with policymakers to, create the right environment for clean energy to thrive.
Exactly. And PFC, with their expertise and their financial muscle, they really have the potential to be a leader in this whole transformation. They can be more than just a bank, right? They can be a driving force shaping the future of India's energy landscape.
It's a pretty powerful position to be in, but also a huge responsibility.
Yeah.
I mean, if they get it right, they stand to, not only gain financially, but also contribute to a cleaner, more sustainable future for India. But if they falter, the consequences could be pretty big.
Yep, absolutely. The stakes are high.
All right. Let's shift gears one last time here. Let's talk about, potential risks for investors. We talked about rising MPAs, the uncertainties of the energy transition, but are there any other red flags that investors should be watching out for?
Well, one thing to keep in mind is regulatory risk. The power sector in India is heavily regulated, and any changes in government policy, things like new environmental regulations or changes to renewable energy subsidies, those could have a big impact on PFC's bottom line.
So they're not just navigating the energy transition, they're also navigating the political landscape.
Exactly. Investors need to keep an eye on those political winds. They can change direction pretty quickly.
Okay. Well, we've covered a lot of ground in this deep dive. We've, explored PFC's strengths, their challenges, their opportunities, even the risks. So what's the final takeaway for our listeners? Should they be bullish or bearish on PFC?
Well, that's a decision each investor has to make for themselves, right?
Right.
After carefully considering everything we've discussed.
Yeah.
PFC is a company with a lot of potential, but also some risks. It's a bet on the future of India's power sector, and like any bet, it has both potential rewards and potential losses.
So it's not a sure thing. It requires careful thought, a good understanding of your own risk tolerance.
Absolutely. Informed investors make the best decisions.
And on that note, I think we've reached the end of our deep dive into Power Finance Corporation Ltd. We've covered some pretty fascinating insights, but remember, this is just the beginning of your own exploration. Keep digging, Keep asking those tough questions and keep your eyes on the horizon because the future of power is always changing. Thanks for joining us on this journey.